Hello everyone. I wanted to do a quick primer on depreciation and amortisation. The process we're dealing with here, it's an accrual adjustment that firms make to systematically allocate the costs of their non-current assets over their expected useful life. We use the term depreciation when we're dealing with tangible assets, that is assets with physical substance or physical presence, like plant and equipment, like motor vehicles, and so on. We use amortization when we're talking about intangible assets, like capitalized research and development, or patents or copyrights. The process that we're dealing with here is to try and smooth out the lumpiness of cash flows. So if we purchase a non-current asset, there's a cash outflow in the year of purchase, and then nothing else happens until any sale at the end of its life. On the income statement, we try and reflect the cost of the asset over the period that we get the benefits. So it's trying to more closely match the cost of the asset over the period of benefits. Let's just do a simple example to make sure that we're on top of the numbers and the process. We'll assume that we're buying a truck for $200,000. We're going to sell it for $50,000 at the end of its useful life, and we think that's going to be in 5 years' time. For our example here, we'll ignore taxes. The first thing we need to determine is what's the annual depreciation charge, and we're assuming here we'll use straight line depreciation. The depreciable amount is the cost less the expected residual or salvage value. So that's the $200,000 less the $50,000. That's $150,000. We're allocating that over 5 years. So each year we're going to be expensing $30,000 in depreciation. So let's have a look and see what its financial statement impact that would have. When we first purchase our truck, an asset goes up, truck, $200,000. That's matched by an asset going down, cash, by $200,000. Now, each year after that we own the asset, we're going to be doing two things. We're going to be recording the depreciation expense. That's the $30,000 charge that appears in the income statement, and that's going to be matched by an entry to accumulated depreciation, which captures the lifetime depreciation or amortization that's been recorded against an asset. So at the end of year one, the accumulated depreciation is only $30,000 because we've had 1 year. So the net book value of the truck is the $200,000 cost less the $30,000 accumulated depreciation, giving us $170,000. So that's the amount that would go onto the balance sheet. At the end of year two, we've still got the cost of $200,000, but we've now got 2 years worth of accumulated depreciation. So that's $30,000 each year, giving us $60,000. So the net book value of the truck is now $200,000 less the $60,000, which is $140,000. Depreciation is typically regarded as an operating expense, so it will be included in our calculation of operating profit. We can see a typical example of this in the 2022 Brambles annual report, where we've got a line item in the income statement saying operating expenses, and we have a look at that in the notes to the account. We can see that it includes depreciation of property, plant and equipment. In 2022, we can see just under $673 million there. But not all organisations will show it exactly like that in their financial statements. JB Hi-Fi, for example, actually includes depreciation in its cost of sales. So we can see in the 2022 income statement, we've got cost of sales of just over $7 billion. Then we can see the depreciation and amortisation information in a number of places. The first place we see it is in the note to the financial statement that talks about segment results. So we can see the segment depreciation and impairment. We can next see it in the expenses note, where again we're told about depreciation and impairment for various asset classes. And finally, we can see it in the plant and equipment account, where we can see the annual depreciation and the accumulated depreciation for each of the asset classes that are being depreciated. So depreciation and amortization, typically an operating expense. You can usually find the information about depreciation and amortization in two places in the notes. One, when the company's describing the various expense line items, and secondly, when you're looking at the way in which it's calculated the net book value of the actual assets that are being depreciated or amortized.